Are you ready for today's
Golden Nugget?
This Golden Nugget. I just wanted to familiarize some listeners out there that may not be all that seasoned in the investment world and dealing with insurance, kind of some key terms to look for. And we touch on this a little bit further in the episode with Kayden, and he kind of, goes over what are some common mistakes that investors make when it comes to insurance policies and so forth. But there's some key things that I think might be good to take note of. One is, I think probably a big one is ACV, which is actual cash value, versus replacement cost value. And what happens, and we talked about this in the episode, but what happens is you can get a cheaper policy, so your out-of-pocket money that you're paying every month for a premium is going to be lower, a little bit lower on an actual cash value policy. But what that really means is, if you have a claim, they're only going to pay you basically what the materials that were damaged are worth, and they're going to factor in how much age is on them. So if you have a 15-year-old roof, they're going to take the value of that current day roof if you want to replace it, and they're going to depreciate it, and they're going to factor in the age of the roof and basically remove how much they're going to. It's called withheld depreciation. So you have a claim on a policy, they're going to hold some of that money back for depreciated money, and then they'll release it once you do the work. But with ACV policies, you get what you get, and there's really, and I'm sure Kayden probably has some things to say about fighting that. But replacement cost is more money, but it should in theory cover most of your claim amount that it's going to cost you out of pocket to repair it, minus your deductible. It's how it's supposed to work.
I'm dealing with that with a property I bought that had an ACV policy on it. But I mentioned this in the podcast, but the gentleman I bought from was like, well, he goes, I have a potential lawsuit against the insurance agent because I actually got quoted an RCV policy, and I have it all documented requesting to move forward with it. But he didn't. So
he got quoted as replacement cost, but actual put in force was ACV.
Yes.
Ooh, yeah, that's an ouch.
And the adjuster working with it, like, no, we want to get through this first part, get the full payout, and then have that be the next step to this.
Now, when I first started investing, I wanted to get the cheapest out-of-pocket money possible on a monthly basis so I could help my cash flow out. And I got all ACV policies. Later on, after going through some claims, I figured out that, okay, maybe that's not the smartest idea, because the amount of savings you get on the premium cost is really not. It's not going to move the needle all that much. So you might as well just, this is my take, and everybody's got their own thing, but I say get the replacement cost. And I'm going through this on a large property right now where the ACV is $1 million and the replacement cost is like $2 million. Huge difference when you start getting up there in property values.
Wow.
Yeah. So ACV and RCV. And then here's a key one, and this is more for larger properties, but they have what's called an ordinance and law component to your policy, which is basically if in the process of doing the replacement repairs, you are required by the city to put some stuff in your property that wasn't there before. Good example of this is if you have to sprinkler the property, if you have to, put in fire alarms, if you have to do some things that weren't there before but now are going to be because of code requirements. That is called code and ordinance. And typically a policy is going to have some money carved out specifically for that. So like we have one we're dealing with that we have a $300,000 code and ordinance provision in the policy that will cover us if we do have at least up to that amount, if we have to do, like electrical or plumbing or sprinklering or things like that. So make sure you have a component of that in there and that you understand it. And then here's my last part of the Golden Nugget here is I have answered this question a lot of times over the years, and I don't think I've ever brought this up on the podcast, but I flip quite a few houses, right? That's kind of a regular business dealing for me. So I usually have multiple flips going on at a time, and there aren't that many carriers out there that will actually place a policy on a vacant property that's under construction. Mm-hmm. So if it's a larger property, typically they categorize that as builder's risk. And if it's a single family or a smaller property, a lot of times you'll hear it as vacant property insurance or something to that effect. So two carriers that I've had success with, I guess, in getting policies placed, and I would say probably the easiest one, and we're not getting paid by them, although we would welcome it. NREIG, which is National Real Estate Insurance Group, I think is what it stands for, also known as REI Guard, and they're out of Kansas City, Missouri. They will issue policies, and they're pretty user-friendly. They have a portal, and you can just go on and select the policy you want and then place it, and it doesn't take very long, like 10 minutes maybe. So you don't have to a ton of back and forth on the phone. And, their claims process, we've been through a couple of them. It's a little bit painful, but it always is anyway with others. And then the other one is Foremost Insurance. And I don't know if that's changed recently or not, but I've had Foremost policies on vacants before.
Yeah, I have also. They do a lot of my construction jobs.
So if you catch this, maybe just make a note, check with Foremost and or NREIG or REI Guard out of Kansas City if you're shopping for a flip policy or a property that's going to be vacant for a little bit of time while you're doing construction on it. It'll cover you. So that's today's Golden Nugget.